Hey guys, Vanel 1258. In this video, which is a much longer video, I'm going to unpack a lot of my thoughts around fiat currency, the centralized banking that happens to run the major economies of the world, and the implications that it has for why we should be invested in cryptocurrency now, and why I'm not scared in this moment of cryptocurrency melting down over the last week. It's a huge video with a meandering thought, but there's so many important things that I want to convey to you here, hopefully so that you can understand where I'm coming from, so that when you listen to my advice, you can understand the pathway that I'm coming from. Guys, thank you so much for your time and attention. Have an amazing day. God bless. I want to focus now talking about the what I think is happening with the economy, with the Splinterlands economy, with the blockchain economy, and just broadly the fiat economy, the US economy, because I really believe they're interconnected. I am not a technical analyst, and I can't do a deep dive on the charts for you, but what I can do to you is like walk you through my logic around the fundamentals of what's happening. And it seems to me that, when you start with, for instance, looking at the major indices, we see that the Dow Jones is been falling. Look at this, let's go 1 month. So on April 20th, the Dow Jones was at 35,160, so 35,160. And today it's at 31,7. Actually, what is that? What is that loss? 35,160 divided by 31,7. Oops, the other way around. 31,70 divided by 35,160. That's a 10% L from the high over here on the 20th of April, which is that's 3 weeks ago. It's a 9%. It's a 10% reduction in that price. And a bear market is technically arrived when you've declined 20%. Look at this. In January 4th, that was the last high, 36,800. Where are we at now again? Let me see. So 31,730 divided by 36,799. So that's a 14% reduction since January 4th. A 14% reduction. Why is this important? It's super important because it actually speaks to what's happening in the broader economy. And you can't understand why the blockchain, in my opinion, you can't understand why the blockchain economy is crumbling unless you understand what's happening in the greater world. And I think what we're seeing is literally the beginning of what might be the next great recession, the next Great Depression even. And I've been feeling this for years. I've been expecting this for years, really ever since the last great financial crisis, GFC for short. When really the government just came out and carpet bombed money, and they printed, in hindsight, like it was a lot of money, but in hindsight, it was such a small amount of money, because what we've done since COVID, we've blown up the economy. We've done even more. Like in Canada, my government during the pandemic printed more money to just give out money to citizens, literally like thousands of dollars. We called it CERB. It was, I don't know what that means, but it's a certain type of funding we were just handing out to every Canadian citizen who was affected by COVID, who couldn't go to work because of, the restrictions and the lockdowns. The government doesn't have that money, so they print that money, and then they give that money away in checks and bank accounts around the country, and that money gets spent, and it buoys the economy. It actually, when you give somebody who has no income $2,000, what do? They spend it on what? On living expenses, on food, on gas, on, maybe if they're actually well off and they don't need to worry about the money, they end up putting it into crypto or into gold or silver or something like that. But it gets spent because it's like a little lottery. It's like if you pulled on the lever and $2,000 came out, you're gonna spend it. And so the thing is, during that time of just carpet bombing our citizens with money, we created buying pressure for all things, including the stock market. And if you go back and you look at when the stock market boomed, 5 years, like look at right here. This is 2020. Right here, December 20. I hope you can see this. December 2019. This is before the pandemic. It's chugging up 2865. Right there is like a new high ish, 29, just before almost 30,000, the Dow Jones. And then that's February 14th, 2020. This is like maybe a week before we learned about the pandemic in China. I think at that point in time, China was building their instant over the weekend massive medical facilities and locking down cities. And we were all like, what's going on? And then boom, 2 weeks later, 5,000 point loss. Another 2 weeks ish, another 5,000 point loss. We went from 30,000 points to 20,000 points. And this is in March 2020. And I remember this time, I remember looking at, we were starting to see lockdowns. We were starting to see that like this could be very serious. Maybe it was going to, we didn't know how big it would be, but we knew it was going to be big. And every country around the world started shutting down. And when they did that, the Western world started giving money out. CERB funding is what we called it. You had something in America. I know you did. And then look at this little March. It just like suddenly V-bottomed. Why? Help me understand. Give me one logical reason why the Dow Jones, which is made up of major corporations that are based in America, why that would spike at the very beginning of the acknowledgement of a total lockdown, right? In that moment, why would it V-bottom out? That means like suddenly spike out of it a new low. It fell 25% or 30%, and then it's just going to explode back up. Why? The only reason is because the government's carpet bombed us, giving us all kinds of disposable income that we didn't earn and we didn't feel attached to. And so we spent into the economy. And this is why major stocks like Costco and Amazon boomed into new highs. Especially those in McDonald's too, and Netflix and anything that we were enjoying in this new sort of economy. It all drove huge gains all the way up into the end of 2021. We just saw like a constant up. And then toward the end of 2021, when we're reaching those new highs around 36,000, 36.5 or whatever it was, that's where we've declined from. And it just feels like, to me, the whole thing, all of it comes down to the fact that all of our debt, all of our printing, all of our economies have been built on this Ponzi scheme of the government printing money whenever it wants to pay for whatever social program, whatever, hand up that it wants to offer. And sometimes maybe it's necessary that they do that. I'm not trying to argue to you that it was a wrong thing to do. I'm just saying that it's not sustainable. And every time they do it, we see these massive price spikes in the market. And then if you look at Bitcoin, it's the same story. Bitcoin, where is Bitcoin? So let's see, this is March 2020, right when that market, when the Dow was peaking, right around February, the Dow was at 30,000, Bitcoin was at 10,000. Then the pandemic, we see a 50% loss almost there. In the same period of time we just described in the Dow Jones, they had a 30% decline. And then what do we see? Look at that. Look at the turnaround there. It goes from right at that bottom and just started boom, right back up into 10,000-ish, 9,500. And then we just started marching. And then we've just done parabolic. And my point is that this whole thing is directly related to how fiat currency is printed in circulation and just handed out for free with no cause or concern for the future. And as long as they continue to do that, we're going to see these sort of amazing parabolic price spikes in assets that are limited in number. And this happened in real estate. It happened in Bitcoin. It happened in the Dow Jones isn't limited in number actually. But I do believe that this is describing, this is like we only have so much of this, and we have tons, and we have infinite amount of fiat, and people are looking for areas to speculate in. I believe long-term, we see the major indices fall to amazing, like dizzying lows. The Dow Jones will crumble, I think. I think the major equity markets will crumble. I do think Bitcoin will probably suffer pretty bad during the bear market. I think gold and silver will thrive in those moments. And that's why I balance my portfolio in that way. But all of that to say, where I think this is going is that right now we're seeing major declines because they've been raising the rates, because the fiat economy has been manipulating the entire thing by recently raising interest rates. In America, I think they just raised it 0.5 point. In Canada, like 2 weeks ago, 3 weeks ago, we raised it 0.5 point. Interest rates are spiking. That affects home prices. That affects home sales. That affects borrowing power because that's equity that you have or don't have. And there's just so many effects that are happening from these central banks that are either printing money or affecting interest rates and manipulating the economy through that, because that's the cost of money. The interest rate is the cost of money, and the cost of money affects everything, like the apples and oranges in your fridge to the house you pay in, the gasoline you use to drive, everything. And yes, even Bitcoin. And so Bitcoin will spike again. This is where we land it, because this is the exciting point, in my opinion. All of that to say that's the problem. Now, and what can we take away from the problem? They're going to do that again. They're absolutely going to carpet bomb more money. Because why? Because everything is melting down. Right now, what's happening is the cryptocurrency market's melting down. The Dow Jones is only about 15% down. But when that gets to 20, 30, 40%, and it will, if they continue to raise rates, they keep saying they're going to raise rates. If they try and raise rates again, watch this thing crumble. Watch it. It will. And what will happen as soon as they do see that happen, they will do what they did before, which is in March 2020, they rose rates by 1/4 basis point, I believe, and then they quickly reversed that and then resumed QE, which is quantitative easing, money printing. They'll totally do that again, guys. And if I'm right about that, we will see Bitcoin go back into the 50,000 mark range. And everything I've been saying for weeks and even months around how Bitcoin will pump, it'll retrace into not new highs. It will not go into new highs, I don't think, but it's going to retrace below this high over here, the 50, it's going to get into the 50,000 range, maybe even 55, but that would be still a lower high. Maybe it'd be, I guess maybe it will be lower than this one, something in the 50 range anyways. And then it's going to, that's it. And during that period of time between now and then, everyone will be going ham because Bitcoin is soaring. It's going from 29,000 to 50. Holy cow, here we go. 1 million. It's going to 1 million, guys. Sell everything, buy Bitcoin. And I'll quietly be saying, like, no, just, this is almost it. Like, just hold you guys, just take a deep breath. This is what always happens. And then in that retrace, I would be expecting altcoins to be going bananas. Like, not, and look at this even, like, this is fun to see. Look, it's spiking hard now. That's actually really significant. What's the volume doing? It looks like a really big volume day also. Let me see in the last 12 months. Yeah, huge. Look at this volume. See these black bars? Each one of those is the volume. $45 million worth of volume. Yesterday, 48 million. Day before, 40. This is really, look at that, 3 huge bars of volume. That's bigger than since June of 2021. That's almost a full year. It like maybe is rivaled by that one bar, but it's 3 bars in a row. That's so indicative of what's going to happen right now. There'd be a hard bounce. And now that would be kind of a dead cat bounce. But I think this is going to continue to bleed out, same as the Dow Jones, same as real estate. And then, like I said, government will try in 2 weeks' time, the next time the Fed meets, they'll try and raise rates. And you're going to see if they raise rates, and they keep saying they will because inflation has gotten out of hand, that's going to force their hands. They will raise rates, and then the whole thing will fall apart in front of them, and they'll drop rates. And they'll carpet bomb money in the biggest way you've ever seen. And that's when we actually might see hyperinflation. And that's when we actually might see, which is hyperinflation is a technical term that means that your currency loses 100, or I think it's 50% of its value within a month, every month. And this happens, and it has always happened with fiat currencies. Every single fiat currency in history has failed. This lecture is long, I know, guys, but it's so important because I want you to understand how I think about this. And maybe I'm wrong. And so this is not like, hey guys, I know what I'm talking about, believe me. It's more like, this is where I'm coming from, and the confidence that I share with you around cryptocurrency, around many of the major altcoins that haven't pumped, comes out of this whole thinking. So challenge yourself around this thinking and actually give yourself some thought, like explore that for yourself. Is the government still raising rates? Yes or no? If they do, watch what happens with the market after they do. And then when they stop raising rates, because they're going to break the economy trying to do it, because they can't raise rates because the government is the biggest debtor in the world, and they can't raise rates because they can't pay the debt off. They can't actually pay the interest even. And so it's this game where they want to pretend like they can manipulate the economy in order to, I guess, control inflation. But in order to have done that, they would have to pay off their own debt, and they can't. That would require selling gold or land, and the government doesn't have enough. If I've looked into all this, they don't have nearly enough gold. They don't have nearly enough land, unless gold is like $20,000 an ounce, which it might one day be. So I'm gonna land it there because I don't know how much you guys even care about this stuff, but it's so important to me. And because you guys are always here supporting me, I want to share that with you, because I really feel strongly that this is actually what's happening. And I think it's going to have these predictable outcomes where we're going to see another retrace in the Bitcoin market. And look at this, 7.2% even right now. That's awesome. 14. And I expect to see days where this happens. Like some of these are going to be 40% up, 50% up, 100% up for 2-3 weeks at a time. That's what's going to happen. And it's going to happen because it always happens. That's actually one of my thoughts. And maybe that's foolishness or naivete, but it's always happened before. So my opinion is that it's going to happen again, that the major altcoins like XRP, Tron, Litecoin, EOS, Dash, even Steam, I think are going to exceed previous all-time highs. Not because I necessarily love these coins. Bitcoin Cash is another one. There's lots of them that haven't exceeded previous all-time highs, not in a major way, and I expect them to. And I'll tell you one last thing, and then we'll move on. 4 years ago, XRP was at 25 US cents, and within a 2-week period, it went from, look at this, 23 cents, November 21st, 2017. That's November 21st, 2017, 23 cents. And look at this. January 3rd, $3.90. That's the possibility in front of us. Like, what is that? This one's December 1st. So it's 4 weeks. Not even, right? December 1st to January 3rd. Yeah, it's 4 weeks from 24 cents to $4. That's what can happen in altcoins. And this is a major altcoin. It's not a small little thing. It's been around for years and years. I know maybe you don't like XRP. Fine. That's neither here nor there. I don't like all these coins, but I just believe that Tron, for instance, which I don't necessarily like and I don't hold any of, I just believe that it will exceed its all-time high of 29 cents. I think it'll make it around $1. It's a 7 cents for now. LTC, it was around, I think the previous all-time high in 2016 was around 360. So it has exceeded its all-time high this year or last year or whatever. But I think not enough. I think it's going to see one more boom into like even $1,000. I don't know this for sure. Please don't count on what I'm saying. But I've walked you through my thinking because I want you to, when you hear me talk about my price predictions or my confidence, this is why. And maybe you disagree. And that's actually really important that's why I want to be so clear and transparent here with what I'm thinking. Because if I'm wrong, the advice I'm providing you might be wrong. And this is where that advice comes from. So I'm going to leave it there unless you guys have any questions. Eli says, what will make the next dip the big drop and not just another cycle of the switching to printing more money? So, it's more like, okay, you got more question. What do you think will push it to the next great financial crisis? So I think what will push it to there's two separate questions there. what will make the next big dip, the big drop. So it's more that around crypto specifically, the next big dip should just logically be this is kind of me leaning on blockchain backer and his technical analysis around Bitcoin. And he has been saying for literally years that Bitcoin will act exactly as it has acted so far, and that at this moment we should expect a retrace into the 50,000 range. And so that's from like a technical analyst expert that I happen to trust. And then he says that retrace though should be, and he's using Fibonacci sequences to like figure out like the retracement zones. And if you watch his channels, which I've watched hours and hours of his stuff, and he does deep dives on this, it's like everything from like Elliott waves to like the retracement, the 702 retracement line. And it's like just a bunch of TA that I couldn't replicate for you guys right now, but a lot of that feeding into it. And the fact that we have seen that combined with the fact that from the fundamental perspective, we've seen some altcoins pump into crazy highs, right? We've seen like, what are some examples? I think Ethereum Classic. Ethereum Classic, I'm pretty sure, like what was this? Look at this. In December 2020, it was 587. And look at this parabolic spike. This right here was what I'm expecting for all our coins. And I bought Ethereum based on blockchain backers advice. I bought Ethereum Classic in here, and I sold in here, like $75, $100. And man, like it's helped transform my investment. So a lot of trust in what he's advised. And so maybe watch what he has to say about it. That's my first thought on like why this will be the big fall, because that's been what he's been calling for a long time. And then second, because the altcoins, there are certain altcoins that have popped off in a major way from, $6 to $100. It's like roughly 20x. And then there are other altcoins that haven't at all done that, like XRP, which went, 20 cents. There's 15 cents somewhere in here, somewhere in the low. Yeah, 16 cents, March 2020. And then we went up to $1.50. That's a 10x, but it didn't exceed previous highs. So I'm pretty certain that we're going to see one more boom into like the $8 or $10 range, and then same with Tron, and same with, it's like, it's the fact that Bitcoin went parabolic and Ethereum went parabolic, and some other coins like Ethereum Classic went 20x, and Doge, remember Doge went like 40 or 50x, but then some coins haven't. And usually within the cycle, toward the end of the cycle, this is what we see, where some have and some haven't. And then I think you start to see Bitcoin do that last retrace, and that would be just the moment where confidence is renewed and some of these altcoins go ham. That's why I think that. And then just lastly, you said, what do you think would push this into the next GFC? That's a question around, that has to be a conversation around, first of all, the government, the central banks losing control of the interest rates. So in Japan, they try to control the interest rates, and they do so by literally buying every bond that wants to be sold, like giving money to all the banks and bond buyers, like printing it, like literally printing that money, creating it of nothing to be the buyer of last resort, because bonds are borrowed money. Some country wants to, usually countries that are in good standing and have good economies, when they want to borrow money, they will create a certain number of bonds. They'll say, hey, we're offering these bonds. And the American government their bonds have been historically gold. They've been golden. They've been so reliable. And then what happens is they know they have a budget overflow for next year. They don't have enough money. They need to create X amount of bonds to pay for the debt that they're going to incur that they can't otherwise pay for. So they create X amount of bonds and they sell them into the marketplace, and different governments will buy those. historically, China's bought a lot of US debt, for instance. Also historically Russia, but Russia has liquidated most of that because I think because they actually believe war might be coming. And I think they've been doing that for years, actually anticipating what's already happening now in the Ukraine. And so what would make this the GFC? Well, this would be the next GFC if they lost control of those interest rates, because what that would mean, because right now, no one is buying US debt, US bonds, except for the Fed. And the Fed prints money out of thin air. So it's literally the government saying we need money and the central bank saying, here you go. And the government saying, okay, here's a bond that says we will pay you back. But we, the government, is funded entirely by this entity that is paying for the, like, buying the asset. Do you see what I mean? It's like we are going to pay you back, but you, central bank, are the one who gives us all our money in the first place. So it's like a kid borrowing money from his dad and saying, I'll pay you back later. Well, like, you get all your money from the allowance I give you. It's not logical. And as the greatest debtor in the world, the government, US government in particular, cannot sustain greater interest rates, because that will impact their ability to pay off the debt that's occurring on their own, on that borrowed money. And so not only can they not pay off the debt, they can't pay off the interest. And that is when governments fall. And so then they have two options. One, declare bankruptcy. And that would mean default on all US bond debt, default on all debt. And that's the sort of thing that can cause war, like global, like world war, because other countries that own billions and billions of dollars worth of debt just get to, like China, for instance, I think they own like something like $3 trillion worth of US debt. That was last I looked, might be less, might be more. That would, if they just declared default on that could literally be like a reason for possibly triggering a major military problem. But they might have to, because the interest rates start to grow and grow and grow. And why would they grow and grow and grow? Because the government loses control of the bond market, because everyone in the world stops saying, I will accept these US dollars that you're printing at infinitum to pay me back, which has happened in other countries that have already gone into hyperinflation. And so it's this, it all boils down to losing control of the bond market. And I think they already, if you watch the interest rates on the 10-year, the 5-year, you can begin to understand that too. 10-year USD bond interest. 10-year treasury rate is at 2.9% compared to 2.9 previous. Okay. Let's see rates. Let's see the charts. So look at this right here. Since January of 2022, where the rates were at 1.5% on a 10-year. So if you borrowed $1 million for 10 years on a 10-year bond certificate, that means you're going to get your $1 million back in 10 years. And that bond would have promised you 1.5%. But as this interest rate rises, what that means is the lenders of that $1 million are less and less confident that the money they're going to get back, because they're saying, I'll give you $1 million. The lender is giving $1 million, and the borrower is going to get 1.5% interest. But that interest rate is increasing and increasing because the lender is less and less confident about the value of the USD in the 10-year window. Like they know everything I'm saying is accurate, and in 10 years that money I've gave you today is going to be worth far less. So I need more and more interest. We get up to 3%, and this is really, really high. Like if you look at this. Oh, I can't. That's too bad. I wanted to see the full. Can I do a 3-year? Look at this. We used to be in here, which you might think, oh, well, it's just like a return to normal. But compare May 2019 US debt to May 2022 US debt. You know full well there's a huge difference. I think it would probably, in 2019, probably would have been something like $19 trillion. And I think in 2022, it's how much is the US debt? US debt clock. So national debt, $30 trillion. This used to be like, oh, I remember when I was in school, it was around 10, 12 trillion. But 30 trillion, it went from 20 to 30 just during the pandemic. And so this, in combination with them losing control of that bond debt, because that bond debt is how much interest they have to pay on this debt. Do you see? And as they lose control, they're trying to push down the interest rate by buying those bonds themselves to hold down the interest rate. But then what that does is actually creates a lack of confidence in the US dollar as compared to other currencies, but also they lose control of the interest rate at some point because people stop accepting the US dollar. And then that's when the thing falls apart. And so this will grow because they are going to continue to borrow, to continue to pay off all kinds of pet projects that will hopefully make you happy during this strange time of crazy inflation. Houses are up amazing amount. That makes it unaffordable to live. Food is skyrocketing. Fuel is skyrocketing. All of this is going to make unhappy citizens. It's going to result in a need to print more. But then as they print more, they make their problem worse. And so they really have two choices. They either pay off their debt, which is not possible, or they default. And that choice will be made for them as they lose control of their own interest rates. And it's, in my opinion, already happening. And so that's why gold and silver, and ultimately that's why long run, even Bitcoin, even though currently Bitcoin is really following the equities market, because these things, gold, Bitcoin, gold and silver in particular, but Bitcoin long term, it's a limited number thing. And so that's why for me, that's always been the play. Okay, that was a long economy talk. I have 24,000 DC right now, Alec, but I kind of want to hold on to it because I might throw it at PAX. The downside of letting your budget being written by people who are deceived by popularity contests. Totally. Yep. Yeah, the economy being based on like essentially a popularity contest is pretty wild. I don't know how to solve it, guys, but I'm trying to understand it so I can then respond to it and prepare myself, react to it. So I don't know. That's my whole thinking on it. And if I'm right, then I would anticipate gold to reach 20,000 US dollars one day. I would expect silver to reach $100 easily one day, maybe $500 per ounce. And right now we're way lower than that. Like silver is around 20 US dollars and gold is around 1,900 US dollars. I really think we could see 20,000 US dollars per gold ounce. And that could happen overnight. And the US government could, in the past, the US government has just revalued gold. They said at one point it was $20. They bought it all from their citizens saying it was illegal to own gold. And then they overnight told everybody it was worth $30. They could do something similar again today, or they could just say, look, we don't even need to seize your gold. Forget about that. They could just say, we have X amount of gold in Fort Knox. If we call every ounce 20,000 US dollars, then we can peg our, like almost like what Splinterlands has done with DEC, and they can peg their now inflated USD to the new price of gold. And that would essentially now, it would mean that gold is worth 20,000 US per ounce. And that might really help you if you have any gold, but it would help America in a bigger way, because it would actually mean they have now enough assets, the gold in their Fort Knox, to pay off the debt. And that could be a new starting point, but that would be huge inflation. What would that do for, the broader economy? It would be this turbulent kind of period of probably 2 to 5 years, I would think, where we might really be eating crow in some ways. Like there might be significant inflation in certain parts of the market. There might be, tons of layoffs. It could be huge. It could be a really significant period of time. I think it's actually very quite likely, but that's why I'm interested in crypto. That's why I'm interested in games that will reward me for my time and attention. And even if I do see huge declines in the short term, I would expect big things in the future. Eli, I appreciate you, dude. Thanks for the encouragement. Yeah, man, it's like the most exciting thing to me is almost in life, or among the most exciting things for me is struggling to grappling with topics that I don't necessarily fully understand, and then trying to articulate that almost incomplete understanding for my own betterment. Henster, nice. Remove, go. So I appreciate you guys sitting with me through that. I appreciate the questions to follow up on that. And I hope that through that you see more of where my mind is at. And even if at the end of that conversation you say, no, I don't really agree with that thinking, that's actually so important to me, because I actually want you to see how my mind works. Because when you watch my YouTube videos, you then begin to understand, oh, he's saying he's not nervous about crypto, for instance, even though it's tanked so much, because he believes X, Y, and Z. And then as we go forward in time and we see either maybe X and Y happen, but maybe not Z, you guys can begin to, predict and ask questions for yourself about what would, follow. That's the key. That's really, in my opinion, if I can do anything, I hope to equip you guys with the tools to think through how you can make your maximum returns for your time and attention, whether it's playing through Splinterlands or whether it's investing in cryptocurrency. And I am no expert at these things, but I do bring a thoughtful mind and like an effort, a real sincere effort to understand. So I'm not going to get it right all the time, but I'm going to choose a direction. I'm going to make my bed, and then I'm going to lie in it. And that's where I'm at. So I'm not at all spooked about this market. And it's really cool to see the bounce happening here. Look at this, 20%, 10%. That's really cool. But I don't think this is the end of, I do think we're going to see huge declines, but between here and there, we'll see exciting gains. And then there'll be new opportunities in 4 years of gain. And I'm going to be here then too. And I hope you will. So guys, I'm going to leave it there. Thanks so much for your time and attention. And guys, appreciate you. Take care. God bless.